Hey guys, this is Nick from forexnoobs.com. Today is Wednesday the 30th of March and it's 15:29 here in the UK. This is not actually the analysis. The analysis is going to start in about a minute. I just thought I'd record this video and add it to the front of the analysis because in the analysis I spotted several trades across multiple pairs. And well, it was all the same trade across multiple pairs, but anyway, that's not important. Point is, since that time, price has continued to push up. So as we see, Euro USD has just started pushing up and up and up, and it has somewhat invalidated some of the trades that I found. Now, there is still potential to take those trades. There is still potential that we might see a reversal here, but it's becoming less and less likely. I will post an update on my blog if this actually ends up being a reversal. I'll post an update and explain why I'm entering and how I'm entering. But I just thought I would post the analysis anyway because I recorded it. I spent 33 minutes on that video. That's just the recording, the rendering and stuff. It's been like 2 hours. So I don't want to just throw it all away and scrap it. So I'm going to post the analysis anyway. It's going to start in about 10 seconds. I hope you enjoy it, but all the trades that I mentioned might not be happening. Thanks and enjoy the analysis. Hey guys, this is Nick from forexnoobs.com with some daily price action analysis. Today is Wednesday, the 30th of March, 2016, and it is 14:02 here in the UK. You're looking at a Euro USD daily chart. In today's analysis, I'm going to go over the basics. I know if you watch this analysis every day or every day I post it up on YouTube, you already know all this stuff, so feel free to skip ahead 1 or 2 minutes, but I have to go through it for anyone who's new. So in today's analysis, I'm going to be going through each pair on my list. So this is the list here. I'll probably be skipping some of these pairs down the bottom: Euro GBP, GBP AUD, GBP CAD, but I'll be going through almost every pair on this list, and I'll be going through each and every time frame for those pairs. The reason I do this is because it's my scanning process for price action setups. I do this several times per day. So let's say, depending on how busy I am that day, I do it 4 times in a day. There's obviously 24 hours in a day. So if I do it 4 times, I'm doing it roughly every 6 hours. Obviously, when you factor in sleep, sometimes it might be, not every 6 hours exactly, but roughly, let's just say every 6 hours. So if I look at my charts every 6 hours and I go through this entire process and I scan through each and every pair, each and every time frame, it ensures that I very rarely miss a trade setup. At least on the 6-hour chart and above, I'm very rarely going to miss a setup because I'm going to see pretty much every single 6-hour candle forming. So I'll be able to see any setup forming and I'll be able to prepare for it. So this is why I scan my charts in this way. I look at every pair, every time frame, 3 or 4 or maybe 5 or 6 times per day. Just depends how busy I am in the day. Sometimes, I'll scan my charts a lot. Sometimes I'll scan them only 4 times per day. Sometimes even less, sometimes 3 times per day. It just depends. And this only usually takes me about 1 minute to do. No, that's probably a bit of an exaggeration, but it doesn't take me very long. But when I do it as part of a price action analysis video, it takes longer because I'm talking through everything. If I'm by myself, obviously I'm not talking through everything. Otherwise, I would probably be insane. Anyway, let's get started with today's analysis. You're looking at a Euro USD daily chart. We're just going to work our way down through the time frames. We could already see here. Now, in yesterday's analysis, I just want to point out that I did say we're probably going to get a lot more potential trade setups tomorrow. And I know this sounds like I'm bragging, but I'm not. It's just normal for Wednesdays to be kind of one of the busiest days. But the markets have delivered. I've already scanned through my charts. I kind of cheated today. I scanned through them before this analysis. I didn't do a real proper scan like we're going to do now. I just kind of flick through them. There is a lot of good looking setups. So let's go through them. Okay, so we got starting up the daily. We can already kind of guess what's going on here. And I also mentioned this yesterday, I believe, that I wanted to, actually maybe I didn't. Anyway, that's not the point. This level here on Euro USD is strong. This is a strong area of resistance. I mean, you just have to look back. What happened last time it approached here? And it was a really strong move up. What happened? Bam, reversed. It made another attempt. Bam, reversed. Now it's making a third attempt. It could push through or it could reverse. We don't know, but we're going to see. Point is, this is a strong area of resistance. It's been tested twice and it bounced away each of those times. So I'm not going to be surprised if it bounces away again, and we're seeing some potential of that. Not so much on the daily, not yet anyway, but 12-hour chart, check that out. It's still about 8 hours until this candle closes, but if it closes like that, that is like one of those picture perfect reversal trade setups. If it closes like this, obviously there's more rules. You can't just jump in if the candle closes like that. You could read about my price action strategy, my free strategy on the site. I'll link to it below this video. But yeah, point is, this setup has a lot of potential. If it closes kind of like this, it's going to be potentially very good. So what are we looking at here? We have a strong bullish preceding trend. So buyers are pushing up into an area of resistance, an area that we've already established is very strong. And we're getting indecision forming. So price is kind of like stalling. Buyers are stalling. It's clear that we went from a trend controlled by buyers to all of a sudden buyers stalling here. Sellers are trying to push against them. So, you know, if this candle closes roughly like this, it doesn't have to be exactly like this, but, you know, roughly, you know, any sign of indecision, what some people call reversal candles, pin bars, whatever you want. Doesn't necessarily even have to be a pin bar, just anything that indicates price is undecided. And then we see sellers starting to take control in the next candle or the candle after that, then I'm possibly going to jump in short, just depending on what the setup looks like, depending on the risk to reward ratio, which is pretty much the most important thing. But looking at it right now, if the candle closes roughly like this, actually, you know what? Let's pretend that this candle, by the end of it, gets a lower wick down to about here. So the lower wick ends up here. See where the green portion starts. Just to make it kind of like more realistic. We're still going to have a lot of room to move down because the way down is quite clear. One trick that I always try to tell my students is to look to the left. You know, when you're looking at entering a potential trade, just look to the left. What do you see to the left? Okay, to the left, we see strong move through this area. So the white area here, nice strong move through it. Had no trouble breaking through. On its way down, it was a bit slower, but still, it was almost consistent lower lows and lower highs the whole way down. It really didn't have much trouble moving down through here. So that suggests that this area in between our two support resistance areas, this area here, is pretty clear. It's pretty easy for buyers and sellers to move through. Even this one here, it moves straight through. So, you know, this trade, it has some pretty good potential. Even if the entry is down here, which is lower than it would be currently, even if the entry is down there, we still got a risk to reward ratio of 2.45 before it hits the support area. And that's just the top of that support area. So we got a good risk to reward ratio. This looks like a really, really nice potential setup. It's something I'm going to be keeping a very close eye on. Euro USD, 12-hour chart, potentially daily, depending on how this closes, but more likely than not, I'll be looking at this on the 12-hour chart. 12-hour chart is one of my favorite timeframes to trade. So yeah, I'm excited for this one. Let's just drop down to the other time frames because, like I said, I have a process, and my process is to go through each and every time frame, and I'm just going to complete that process. I believe it is important when you have a process to just go through it. Even if you know you're not going to find the trade here, even if you've already found the potential trade on the 12-hour, you just go through it. It's just about getting into the habit, getting into that habit. And we're seeing on the smaller time frames, we're seeing the setup looks quite good also. But you know, I find that I prefer trading the higher time frames when I can. So I'll probably be watching this on the 6-hour too, but more likely than not, I'm going to hold out for the 12-hour setup. I don't want to jump in too early on the 6-hour or the 8-hour. Probably going to hold out for the 12-hour setup. Okay, GBP USD. Another pretty decent looking setup. This one is actually looking pretty good on the daily too. Now the thing is, right, we're gonna look at this setup here. But let me show you. I guess it's not a trick. It's not really a trick, but it's just something that a lot of people do not do in Forex, and they should do it. It's important. They should do it. Currency correlations. Now, a lot of people assume that currency correlations are set. So GBP USD and Euro USD are always going to be correlated, and that's not the case. I mean, most times GBP USD and Euro USD are, but it's not always the case. So whenever I have two setups like this, GBP USD and Euro USD, they both look pretty good. Actually, you know what? Let's go through the GBP USD setup first, and then we'll look at the currency correlations. That makes more sense. So GBP USD is looking good on the daily. Not as good on the 12-hour. It still looks okay on the 12-hour. Let's just drop down the time frames, look through all of them. So we got some indecision on the 6 hours, looking good there. 8 hour is kind of looking okay here, but as I said, I try to gravitate towards the higher time frame. So 12-hour daily is what I'm looking at here. 12-hour, we've already got a nice indecision candle. So let's just base the setup on that. I'm probably going to wait for the daily, but let's just base the set. Oops. Yeah, let's just base the setup on this. Saying an entry roughly here, stop loss roughly there. So we got 1 to 2 risk to reward ratio. So a risk to reward ratio of 2. So that means that this trade is viable, worth taking. So let's look at this setup. Well, there's really not much to look at. I mean, it's quite a clear setup. It looks good. We got a strong bullish preceding trend. We got indecision forming on an area of resistance. Area of resistance has proven itself 2 times here. Kind of actually pushed up to there and bounced away there too. So it's got 3 significant recent bounces. So it's a pretty strong area of resistance. Has, like I said, strong significant bounces. Strong recent significant bounces is what I'm looking for. So, you know, good resistance area, good indecision, pin bar, whatever you want to call them. I call them indecision candles because that's what they are. They're just indecision. They don't mean reversal. They just mean price is undecided. So strong indecision, strong resistance area, you know, one of those nice looking setups. Now, if this candle closes like it is now, this current candle, you might be able to play around with your entry, get in a bit earlier. Stop loss should stay the same. Stop loss is based on recent highs for me. So that's the most recent high. So that's where I would want my stop loss. Entry, you know, should probably be based on this candle because that's more of a significant low. But you know, if you really want to jump in early, you could jump in at the bottom of this candle, provided it closes as it is right now. You know, that's up to you. I'll probably be basing my trade on that candle if I do trade this on the 12-hour, which is probably not going to happen. But regardless, this is a potentially good setup. But it really is the same setup as Euro USD. I mean, these are pretty much the same trade. So that leaves us with a problem. If we enter both these trades and both of them fail, if one of them fails, potentially the other one is going to follow. If it's correlated, potentially the other one is going to fail too. So you're essentially entering the same trade here if you enter both these trades. Well, possibly. You're not 100% sure, but that's why we look at currency correlations. That's why, you know, before you enter more than one trade at a time, you always, even if they don't look correlated at all, you always check your currency correlations. You always make sure that they're not correlated because you don't want to be in 2 trades that are essentially the same trade. It's never really a good position to be in. So I'm going to go down to GBP USD and where's Euro USD? Strong high positive correlation on 1 hour. Very strong positive on day over the period of a week, strong high positive. So these are extremely highly correlated right now. They are. So my advice would be pick one. Because if you pick both these trades, they're either, more likely than not, they're either both going to be successful or both going to be failures. And you may as well just stick to one of them. So I'm going to be looking at probably Euro USD. Looks better to me right now. But I'll just see how it plays out over the next 8 hours until the 12-hour candles close. And we'll just see how it plays out. AUD USD looks like it has a potential reversal too. I told you that the Forex market has delivered. The trading gods have delivered. They've given us a lot of setups. AUD USD does not look as good though. I'll tell you why in a second. Let's just go through. So, back up to the 12-hour, because that's where it looks best. Why doesn't AUD USD look as good? First of all, the resistance area is not as strong. It's only had one bounce. So, some people would argue that because it's only had one bounce, it's only been tested once, that makes it stronger. Differing opinions on this. I like to see a resistance area that's had several bounces, because to me, a resistance area that's had several bounces means that it's a strong resistance area. Some people will say, but it's been tested too many times, it's likely to break. I'm not going to get involved in arguing about that. That's just my opinion, and that's how I see things. The more bounces, the better. I mean, obviously, this doesn't hold true if you're getting to like 10 bounces and it's becoming clearer and clearer that it's trying to push through. But in a case like this, I prefer the Euro USD resistance area. Looks very strong to me still, as opposed to this AUD USD one. First of all, with this AUD USD one, it's only had one bounce, like I said. And right now, price has moved higher than that bounce. It's poked above it. So it doesn't give me as much confidence in this resistance area. But that's not that important. The most important thing about this trade is price has already spiked up. So in the previous candle, this one here, price spiked all the way up to here, 76.97. So that means our stop loss is going to have to be above that. I place my stop losses based on price action because I'm entering a trade based on price action. So if I'm entering a trade based on price action, I want my stop to be based on price action too. So we're looking at a risk to reward ratio. Because our stop loss has to be all the way up here, above one of the most recent highs here, our entry is pretty much at the low of this candle that hasn't even closed yet, may not even close like this, but if it does, our entry would have to be roughly here. It's only going to give us a risk to reward ratio of 1.66 by the time it approaches this support area. So it's just not as good as Euro USD, which is giving us a much better risk to reward ratio, which was, I may as well draw it again. So I think it was 2.45 or something like that, 2.6. Yeah, 2.5, 2.6, something like that. So obviously much better risk to reward ratio with Euro USD, and I'm going to probably go for that. And again, this is probably correlated. Weak low negative, but that's just over the course of an hour. Very strong positive on over the course of a day and a week, etc. And a 12-hour chart trade, you're going to be holding it for a while. So these ones apply more the 1 day, 1 week, 1 month. So yeah, AUD USD has a strong positive correlation. So that tells us right away that, we're only going to want to enter one of these trades, and AUD USD is probably the worst one. As it stands now, before the candles have closed, remember, AUD USD is currently the worst one. USD CAD. Through all the time frames, this is going to be some long analysis. USD CAD sitting on support. What happened last time? It was at this support area. It had a strong bounce. So looking good. But USD CAD, strong high negative. No, that's CHF, sorry. USD CAD, very strong negative correlation, moderate negative correlation. So this one's going to be moving in the opposite direction. So again, essentially, we have the same trade. Across these four pairs, we have essentially the same trade. So this one's on support, And if it reverses, it looks like it's going to push up, right? But it's pretty much the same trade as the short on Euro USD. It's just this one, because USD comes first, it's it's going to move up if it does reverse. So again, we have essentially the same trade, and the trade looks better on Euro USD. So I'm still going to stick to Euro USD. New Zealand USD is forming indecision up here in the middle of nowhere. Now, recently, I've been more free with adjusting my support resistance areas to fit the most current indecision candle. So that would be like, in this case, adjusting it up to here. So if you were to do that, you'd have to look to the left and see if there's any evidence for a resistance area there. In this case, there is absolutely no evidence. So I'm going to pull my resistance area back to where it was originally. And I'm probably not even going to look at this as a potential trade setup. Yeah, nothing happening on New Zealand USD. That's worth trading, in my opinion. Let's go to the daily USD JPY. USD JPY is in between two support resistance areas, so yeah, not really interested in that. GBP JPY. I'm really not liking GBP JPY that much lately. In between two support resistance areas, so not much going on there either. Euro JPY. We talked about this one yesterday. And some people entered on the 1 hour and on the 4 hour and on the 8 hour. And why? Why? This setup looked good on the 12 hour. It looked good on the 12 hour. At the time, it doesn't look good right now, but at the time, the candle hadn't closed yet. It looked good on the 12 hour. It had some potential on the 12 hour. And a lot of people took that to mean that, well, it looks okay on the 12 hour, so I'm going to drop down to the 4 hour and jump in there. And then what happened? Well, the inevitable happened. It spiked down, got them in, and then pushed back up. I mean, a volatile pair like Euro JPY, it's volatile. It has these spikes. It has them all the time, especially when you're on low time frames like the 4 hour. I mean, spike up, spike down. There's just tons of examples of spikes everywhere. Price just pushes down and then comes back up. It does that a lot. So if you're looking at a trade setup on the 12 hour and it looks good on the 12 hour, but the candle hasn't closed yet, your immediate answer is not to jump down to the 4 hour and try to look for an entry there. I was waiting for it to close on the 12 hour, because if it closed on the 12 hour and it formed indecision there, then you would need another candle, another 12 hours, or at least another few hours into that next 12 hour candle before we start to see sellers taking control of price. So I want Euro JPY to prove to me, I want the sellers in Euro JPY to prove to me that they've taken control of price. I don't want them to spike down for 10 seconds, get me into a trade, and then go back into the original direction. If it's a process that's happening over 12, 24 hours, where we're slowly starting to see the turnaround from buyers being in control to sellers taking control, if it's a process that's happening over 12, 24 hours, it's more likely that the sellers are going to keep control of price. If you jump down to the 1 hour chart, if you jump down to the 4 hour chart, more likely than not, that quick spike is just going to be a quick spike. When it pushes down, it's probably just going to push down for 10 minutes, 20 minutes, and then come back up. So that's why I was saying yesterday, 12 hour daily chart. I'm looking at it on the higher time frames, because I don't want to get triggered into this trade when price spikes down very quickly, like it does all the time on such a volatile pair. It does it all the time. Bam, bam, there, spike up. Well, no, that's kind of indecision, but you get what I mean. We always get spikes down on this pair. It's just, or even spikes up. It just like, look at that one, crazy, and that one before that. So I don't want to get triggered into a trade by these spikes up and down. So yeah, that's why I was saying 12 hour daily. Even on the 12 hour, you get spikes down. Like, look at those ones. but it's safer. The lower you drop down, the more of these like spikes you're gonna get. 1 hour, it just spikes all over the place. Look at that one. So I don't want to get triggered into trades by all these spikes that happen, all these quick sudden movements. So that's why I was looking at the 12 hour. So those of you who jumped in on the 1 hour chart, no. Don't do that again. Not on volatile pairs. I mean, if you want to look for a good entry on a smaller time frame and you're trading a non-volatile pair, maybe it's okay. I still gravitate towards the higher time frames, but maybe it's okay. But not on a volatile pair. The spikes are just too much. Too many spikes, too many big unexpected moves. And honestly, I don't like Euro JPY in general. I'm not really liking any of the JPY pairs this year. Anyway. Did I even go through all the time frames for this pair? I don't think I did. Yeah. Okay, AUD JPY. Nothing going on here. USD CHF. Some people, I believe, if I remember correctly, are looking at potentially taking a long here. I'm not too sure about it. I mean, I see the support area here being very strong. Not too sure about down there. I'm going to keep my support area where it is because it's based on some very strong recent bounces. And I'm going to say nothing on USD CHF. Euro AED, yeah. Let's just go through Euro AED. Why not? Why not? May as well just go through all the pairs today. All the pairs I have my support resistance on anyway. Euro GBP already has an active trade, a short trade that some people are in. Wasn't the best of trades, but it is still heading down for them, so that's a good thing. A lot of people on the forum were contemplating jumping out because on the 12 hour anyway, price was stalling. My suggestion was not to jump out because there's no clear indication that buyers had regained control of price. So the trade wasn't on the 12 hour, but you could clearly see the reversal trade here. Indecision was on one of the smaller time frames, I believe. Yeah, roughly there. Wasn't a great trade setup, to be honest. I didn't like it, but not everyone has. Not everyone in the course, in the advanced course forum, not everyone kind of limits themselves as much as I do. I kind of limit myself to the trades I take. I try to take the best looking setups. A lot of people don't do that. A lot of people are happier to take kind of the dodgier looking setups. And that's fine. I mean, it's really up to you how you decide to implement price action. If you want to take the riskier looking setups, then go for it. But this one was too risky for me. But some people in the advanced course entered it. Some people in the forum entered it. And they were chatting about potentially closing this one out. And some people said, yeah, they're going to stay in. Some people said that they want to close out. My suggestion was to stay in. Now, I'm not sure how it's going to turn out, but I just thought I'd talk a little bit about this trade and trade management in general. When you're looking at a trade, when you're looking to manage a trade, it's kind of a good idea to read the price action. So you're in a short trade. You want sellers to be in control of price, so you need to read the price action. If sellers start to lose control of price, it's a sign that you might want to close out the trade. But the question is, have sellers lost control of price here? I don't know. Not really. Not completely anyway. I mean, we're still getting pretty consistent lower lows. Even this candle, even though it closed as kind of undecided. It was still a lower low, so the low was lower than the previous one, and the high was lower, so lower low, lower high. That's a good indication that sellers are still in control. This next candle here was a bit worrying, of course. It has a higher low and a higher high. The higher high is not that significant, but it's just one candle. It's just 12 hours. You know, you're in a trade, you're in a short trade, you've held it for this long. You know, it's silly to just panic and jump out just because a single candle is opposed to the overall trend. So my suggestion was to just give it some time and see how it goes. And I guess, I mean, we can't say that I was right. As this candle is forming now, it looks like it was a good idea to wait. But obviously, we're not going to know until this trade ends. I mean, for all we know, price could turn around and push all the way up to there by the end of the day. So we don't really know. But, you know, when you're in a trade, right, and you're seeing something like this, you shouldn't worry too much about it. You shouldn't freak out and jump out of the trade, is what I'm trying to say. Just kind of like give it time to develop, because even in strong trends, even in very strong trends, price isn't always just going to move straight down. I mean, look at this trend here. This is a nice reversal setup on Euro GBP, this one here. Now, most would agree that this was a strong bearish trend, this trend down here. But did it always move straight down? No. Actually, look at that. That's almost picture perfect. Well, not picture perfect, but almost. It's almost exactly what happened there. Look at those two there. Wait, let me highlight them for you. So look at these two things here. They almost look exactly the same. And it continued down this time. So my point is, these little lulls, L-U-L-L, I believe, these little, I don't know what to call them, lulls that you get in a trend, they're not any reason to panic. They're just normal. They're part of a trend. Trends don't usually just go straight in your direction all the time. They usually move in your direction, stall a little bit, continue moving in your direction, stall a little bit. And when you're in a trade and you see something like that, don't freak out. Just accept that it's probably just a small little stall in the trend, and that it has potential to continue in the same direction. Now, if price stalls for like 5 or 6 candles, or maybe even, 5 or 6 candles. I mean, it depends on every situation. There's no set number of candles. But my point is, if price stalls for a lot longer, then I would probably start saying, okay, I mean, sellers are clearly no longer in control. I'm probably going to exit this trade. But just these 2 candles here, nah, no reason to exit. Anyway, let's finish up the analysis real quick. A long analysis video. Nothing really happening on, and GBP CAD, I don't know, not really a pair. I'm not even sure why I have support resistance on this pair, to be honest. I don't think these support resistance areas have been updated. Oh, maybe they have. Nothing going on here. So basically what we're seeing today is a setup. Look, it's already spiked down and made a new low. So that already changes. Or maybe it doesn't. No, I don't think it does. Anyway, it doesn't matter. The point is, what we're seeing is a setup, the same setup across the board on Euro USD, GBP USD, AUD USD, and USD CAD. And even New Zealand USD, except New Zealand USD is not on a resistance area that I currently have marked because it has no historical resistance. But we're seeing the same trade across multiple pairs. I'm more likely than not only going to take one of these if it actually even ends up being a trade. I'm gravitating towards Euro USD, possibly even GBP USD, and AUD USD. I probably won't take it there, nor will I be looking that much at USD CAD. Probably going to be either Euro USD or GBP USD. If you're entering both these trades, keep in mind that they are essentially the same trade, just on 2 different pairs. So, you might not want to do that. You might just want to stick to one pair, make your life easier. Keep currency correlations in mind. If you trade any other pairs, I'm sure there's a lot of people here that are looking at different pairs than I have listed here. And you're seeing a setup on there today. Keep in mind that it might all be part of this same setup that's spread across all these pairs. So check your currency correlations. I use the Oanda one. Just Google Oanda currency correlations and it'll take you to this page. I use Oanda for my currency correlations. I just check them on here. Yeah, so I hope you guys enjoyed the analysis. This is pretty much the longest analysis video I've ever done. And I'll probably see you for tomorrow's analysis video. So I'll see you guys later. Thanks.